Hey VV Nation, welcome to our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and I've got another video for you. Well, it's talking about the market path and can the bulls hold on to this current rally that we're in right now? And there's a lot of things to talk about it, so let's get right into it. First things, well, if you're going to take a road trip or go down a path, you need to know what your current roadmap is, how to lay this out. And let's talk about what's going on in the market currently right now. I've got some news headline stories. Dow soars more than 400 points as traders cheer stronger than expected U.S. economic growth data. The U.S. GDP accelerated at 2.6% pace in quarter three, better than expected as growth turns positive. Outside of the United States, the ECB hikes rates by 75 basis points and scales back support for European banks. And then it leads us into what's getting ready to happen here. Powell again is facing political pressure as worries mount over the economy, because there's a lot of people saying that Fed is overshooting right now to overcorrect what's going on with inflation. And, you know, the Fed normally has the idea or normally does overshoot on a lot of things in correcting, but he's under the pressure. But he did state that he was going to do everything that he could to combat inflation and that his economic policies were going to cause the economy some pain, which it is. But is the pain enough at this particular point in time? So let me give you the bearish side of it. Inflation is still at 40-year highs. We still have rising inflation rates. Now, with that, does the Fed continue to be hawkish, or does he succumb to the pressure and start to cut back? If he does cut back or stops interest rates from rising right now, the market is going to take off like nobody's business. But if he turns around and he continues to stay hawkish, 75 basis points, probably one full basis point or 100 basis points on the table, if that's still there and he uses it, this market is going to feel the effect. So next thing is, do we have a hawkish Fed, or is he going to succumb and become a little bit more dovish? And a lot of companies, a lot of big companies reported this week, and we still got a lot more, a lot of earnings misses. That's all part of the bearish side. Now, let's talk about the bullish argument, though. Well, GDP is getting better, right? The strong market, strong job market, sort of. Unemployment is still at lows, but is it better? A lot of companies out there are still looking for people to fill jobs, and they're having a hard time getting people to fill a lot of jobs as well. So it's still, unemployment is still low, but it's sort of kind of good bad. This is the big thing for me right now. With all of these relief rallies that we've had, they've been spearheaded by oil/energy stocks. It's been a focused move on those stocks. Now, if the bulls really have the wherewithal to move this market higher and take us down the path that, everything is great, you would think that it would be a more inclusive move in the up movement of the market, right? Think about that. So if this was a real bullish takeover and the market was really going higher, it would be more than just oil and energy moving. All right, so let's talk a little bit about that. Let's get into the software. And as we look at the software, here is our market timing graph. And I'm going to look at over a year's period. I've got two downtrends that we've been experiencing from the November high of last year and from the August high of this year. Notice that the longer term trend, the November high, we've broken above this 1, 2, 3 times. And each one of those times, it's been oil or energy that's been moving the market higher. Let's come in a little closer to the August high. We've broken above it once and twice. And again, what is the definition of insanity? Watching the same thing happen over and over again and expecting a different result. If these moves have been spurred on by oil and energy, what do you think is going to happen right now? Let me zoom in a little tighter. From this August high, we went above and quickly came back below it. We're currently above it. I want you to look at today's and yesterday's candles. These are selling wicks, high wicks at the top of the bars, stopping where? Right at a level of resistance on our VectorVest composite at 5409. So even with the good news with the GDP and some of the companies beating earnings and unemployment and all of those things, the bulls are still trying, but they've got to get through some headwinds in order to continue moving higher. So what is all of this telling me? Are the bulls going to be able to control this market and keep it moving higher? I think with a lot of things behind the scenes, waiting to see what the Fed is going to do and a lot of other things, I need you guys to be careful. If the market is giving you the opportunity to buy stocks, by all means, take advantage of it. But don't be afraid to pull some of those gains off of the table pretty quickly, especially if the market is at that level of resistance and can't get through it. You're going to feel the effects. And then we're also going to see what the Fed's got to say. So that's my story for you today, and I'm sticking to it. Take what the market gives you, make that money. But be careful, because all of these moves have been spurred on by one specific space in the market. That's not healthy for the bulls to continue to carry this market higher. Folks, this video is over. And until the next time, see ya.